What's good, everyone? Max here, Wealthier by the day 13. We've almost made it 2 weeks. I got 3 topics I'm going to cover today. Let's jump into it. Before we jump into it, though, I just want to stress I am not a financial professional, and this is not advice. This is just what I do. Take it with a grain of salt, do your own research, all that good stuff. Like, comment, subscribe. Now we'll jump into it. So, first topic I want to talk about today is when I will probably retire based on a spreadsheet I have created that projects my retirement age. It's not looking good, but we'll go into that. The second thing I'm going to talk about is before you, one sec. Okay. Before you, pretty much the number one thing you want to do before you invest your money. Pretty simple, but it's something that can have very big outcomes towards, I don't know, when you're in your later years of life, like decades down the road if you're pretty young. So this is what I would recommend everyone do, and I did it a few years after I started investing, but I would have done it earlier if I knew about it. Just because you can save a ton of money in the long run if you do this. The third thing we'll talk about is keeping a long-term perspective when investing. This can be really difficult because you have to be proactive in the short term so that you can have a ton of money in the long term, if that makes sense. There's a lot of sacrifice and there's a lot of having faith that what you're doing now is really going to pay off down the line. So we'll talk about that. Again, please like, comment, subscribe. Let me know topics you want to hear about. That's why I'm making these videos. The more feedback I get, the easier it is for me because it can kind of steer what I'm talking about. Me, I'm just thinking of things, 5-10 minutes before the video, writing up some bullet points, and I'm just kind of diving into it and just kind of ad-libbing a little bit. So anyways, so when will I retire? This is the first one. Based on my calculator, I'm set at 55 years old. That's what I'm at right now. I'd say about a year ago, it was more like 45, 47, but this is what has kind of thrown things off. I have a considerable amount of debt that I'm paying off. That doesn't mean I'm not investing any money right now, but I am kind of doing the juggling thing where I'm like paying off debt here, investing a little bit of money here, which I think there's probably some opportunity cost. Like I could just pay off all the debt here and then just pay off all the debt and then move my money here. But I'd rather invest into the market as I go because honestly, the market seems there's some pretty undervalued stocks right now, and it's trading indexes are pretty low right now. So I want to be in the market as much as I can be, but I do have to take care of debt, which is number one. And I'm trying to think, is it Rich Dad Poor Dad? Yeah, he talks about in Rich Dad Poor Dad, Robert Kawasaki, I don't know how you say his last name. I'm sorry, but he talked about his rich dad, which is actually his friend's dad, would basically not. He would pay debt off, but he also would not like just completely pay it off. He would try to do both at the same time. His logic was, you will find a way to get the money if you're investing and trying to pay off debt simultaneously. And I kind of agree with that. You end up being a little smarter with your money maybe, and you make it happen. You make it work. And if you don't, in the back of my head, I'm like, I can always just go to my my stock market portfolios and pull out some money and pay off that debt. But it's kind of a game to see how much can I invest, and at the same time, how fast can I pay this debt off before I actually start accruing interest on it? Because I'm not going to accrue interest on this debt. That's not going to happen. That's not the point of why I took the debt out because it was basically like a low fee associated with pulling it out. I won't go into the details on that, but bottom line right now, we're looking at 55-year-old retirement age, which is earlier than most people are going to retire. So most people probably nowadays retire at like 65, and I think I really think I could retire by the time I'm like 45. That seems like a pretty good round number to look at. Maybe even a few years earlier, depending on how things go. So I'm not too worried about it. But I'm 28 right now, so I mean, I think I'm going to have to work basically a job similar to what I'm working right now for at least 10 to 20 years. But depending on how things work out, and if there's other opportunities that come up that maybe are a little more appealing. So anyways, so that's what we're looking like, 55 years old. And I did write a few things up. And I could move this up. I got to pay this debt off. If I could find assets that give me a little bit better return on my investment, that would obviously help. If I could earn more income and therefore invest more income and not let lifestyle inflation affect me too bad, that would help a ton. And yeah, I mean, income and increasing your portfolio value, investing in more diversified assets over time, which right now I'm basically exclusively invested into the stock market. So, over time, I'd eventually like to get into real estate investing out of state, because I live in the United States. I live in California. So I'd like to get into out of state real estate investing, but that's, again, I don't have the capital right now. If I was going to do that, I would want to outright buy a property. I wouldn't want to get involved with lending money just yet. This is based on some other people's recommendation, but they're like, you should just own 1 to 2 properties outright before you start playing that game of getting a mortgage and using the cash flow to pay off your mortgage while also hopefully netting a little bit, if you kind of get what I'm talking about. So that's in the more medium term. Real estate is something I'm interested in. I think it would just be really fun to get involved in that asset class. But that's kind of where we're at right now. 55 years old, not getting ahead, not falling behind. Right. I do want to get ahead though, and I think I will be getting ahead eventually. Just got to get some of this debt figured out, and also just need to figure out ways to increase my income. Which increasing your income at your job, that's one way, but I want income coming in outside of my job. So I'm working on ways of creating that excess stream of income, if you will. So we're working on it. It's a long process, but you have to create a base, and you have to set things up pragmatically. And if you do it right, again, it'll work out. So that's kind of my thinking. I think I got a work email. Next thing, okay, what is this? What's the number one thing you could do this before you really start investing? Open a Roth IRA. That should be the first investment account you ever open, is a Roth IRA. You can do it once you're 18. I opened just a standard brokerage account. I started on Robinhood, which is fine. It's a fine platform. I switched over to Fidelity because I wanted to consolidate all my retirement accounts and my standard brokerage account into one spot. But I started on Robinhood, and that was the first thing I opened. And of course, I was like, it was a mix between dividend-paying stocks and growth stocks. It was just everything that was popular at the time, or anything I could find information on. So that's how I started. If I could go back, I would have opened a Roth IRA with Fidelity, and I would have just started maxing that out every year. So in the past, it's been like $6,000 a year that you can invest into your Roth IRA. And that would be maxing it out, where you can contribute $6,000 a year. Now it's $6,500. I imagine because cost of living goes up, inflation, all these things, you need more money to live in the future. So now they're giving you a little bit. That's like the law says, okay, we'll give you $500 more a year to invest. And I imagine that will go up to $7,000 and $7,500 in the future. It'll probably continue to go up. With that said, if you are new to investing, or if you're a newer investor, or even maybe if you're relatively young, I'd say anywhere between, 30, 40 even, to me, that's relatively young. Open a Roth IRA and start maxing it out. Make that the investment account maybe outside of your 401k, because you might have a 401k as well, and you're trying to juggle, I'm putting money here, I'm putting money there. But make that your main, prioritize that as the investment account that you max out first. So what I do is I max out my Roth IRA, and then I take whatever money is left over, and then I put it into my standard brokerage account. Right now, my Roth IRA is maxed out for the year. I did that right at the beginning of the year. I had some excess money. I maxed it out. I maxed my wife's out. That way I don't have to think about it for the rest of the year. And now I'm just putting money into my standard brokerage account. I am putting money into my, Roth 401k as well. I'm pretty much doing whatever my employer matches. I could be putting more money into there. However, those funds are a bit limited, and the nice thing about putting it into my standard brokerage account, or at least some of the money into my standard brokerage account, is right now, as I talked about in the last video, I have identified some companies that I think are trading at pretty good values. I think they're pretty good bets. Investing in individual stocks is always somewhat of a gamble, but I'm pretty confident in the bets, and I don't think I'm going to lose money. I think I'll at least make some money. And worst case scenario, I underperform the market a little bit, which is worse, that's shitty, but it is what it is. So that's the thing with a Roth, like a 401k, you can't pick individual stocks. At least I've never had the option to. So that's kind of why I do I do the things the way I do them. But for you, especially if you're newer, and this will actually go into another point in another video I made. I actually planned a little bit for another one, but open a Roth IRA and just put your money into index funds, put your money into ETFs. I mean, I'm biased. I live in the United States. I have home country bias. I put most of my money into the United States stock market, like 60 to 70%. Some people would probably not recommend that. Some people might say you should have a greater international allocation. I do put money into international markets through ETFs, but it's hard when the S&P 500 has historically returned like 10%, and these international markets, not so great. I do invest money in emerging markets as well, which that would be like, I think China is considered an emerging market. So if you maybe are biased against China, I guess don't look into emerging market ETFs. But like EEM is one that I invest into. That's an emerging market ETF. Anyways, but so first thing you do, and I mean, even if you've been investing, do this if you haven't already. Open a Roth IRA and max it out every year, because that money is going in post-tax, but it's coming out tax-free. And that means you don't have to pay any money on that income when you pull it out. So if you have $1 million in your Roth IRA by the time you're 55 and a half and you can actually touch the money, that is literally $1 million that you will not have to pay any taxes on. I mean, you'll have to pay like sales tax once you take it out and actually use it to purchase things, but you get what I'm saying. You don't have to pay capital gains tax on it, which $1 million, I think that goes a long ways. Like even with inflation and all of that in the future, that goes a long ways. So think about that. Like, obviously you got to live for now. And like part of the reason I like investing in my standard brokerage account is because it's like, it gives me a little bit of hope for now, because I can touch that money whenever. And let's say I do get maybe a bit of an above average ROI on the money and I need the money, I can use the money. I can't use the money in a Roth IRA, or else I risk having a huge penalty, right? So anyways, I won't drive this point home anymore, but invest in a Roth IRA. The tax benefits make it completely worth it. Max it out every year. And then from there, figure out what else you're going to do with your money as far as investing goes. Okay, moving on. Third point, and this kind of plays into what we just talked about, keeping a long-term perspective. When it comes to investing, you're thinking decades down the line. You really are. Like me, I just said I'll probably retire when I'm 55. Based on current data I have, current projections and forecasts. Now, I think that'll move up just based on right now, I'm not in the greatest financial position. I think that'll move up as things kind of level and my income tends to increase over time from what I've seen historically. So that should move up. With that said, like even if it moves up a decade, that's still 17 years that I'm waiting before I retire. It's a long time. So you have to keep that long-term perspective, and you have to do things right now so that in the future you have the opportunity to actually retire. Even if you're not retiring early, you have the opportunity to retire. With that said, you have to live your life. You have to spend money now to enjoy your life. Money is freedom. I don't care what anyone says. If you don't have any money, you are not free, especially in the United States. Like, your quality of life is significantly worse, and everyone needs a vacation here and there. Everyone needs to get out and see shit and do fun things, right? So, like, you have to have this long-term perspective. So what I always, like, this is my personal kind of plan, is like I do as little as possible now to enjoy my life, and I try to live lean. But like if I need something, like I bought a new truck recently because I was driving my sister's old 2008 car around, and I was like, I want a truck. My last job, I had a company truck. I was like, I want a truck. So I went and spent some money, and I was like, yeah, maybe not a need, a kind of want, a kind of need. That was kind of my reasoning. But it's like, you gotta live your life now. And if having that truck, for example, really does make your quality of life that much better, which for me it does, just because I enjoy driving it. I I'm not going to lie, feel better about myself driving that truck around than this old piece of shit car, then do what you got to do. Everyone's got their things that they want, their things they need, and then their things that are kind of in between. And the things in between are the things that's where you're going to have to do some soul searching and figure out what's important to you and where you're willing to spend money and where you're not willing to spend money. Because that money I spent on the truck, it's a good chunk of change. That could have turned into hundreds of thousands of dollars someday, potentially. It's possible. But with that said, of course, you do have to keep the long-term perspective. So if anything, just do the minimum as far as investing goes. Try invest, like I said, like max out your Roth IRA every year. If you're doing that, well, you're in better shape than the vast majority of people. Just maxing out your Roth IRA, because I mean, that's $6,500 a year. Let's say you do that for 30 years. That's like $180,000. That's like close to $200,000. So $200,000 over 30 years at a 10% interest rate. I can't do that math right now, like the actual compound interest. Let's say that's like, I don't know, that'd probably turn into like, depending on the ROI, it's like you're probably going to get what, like $600,000 out of that, let's say. Just that's kind of like just shooting from the hip, 600 grand. Like, I'll take it. If I invested $200,000 and I end up with $600,000, like just by doing the minimum, like that's free money, dude. Like, you got to do it. So keep that long-term perspective. Do what you can. You're going to have to play that game where you're like, is it worth it for me to enjoy my life now, or should I sacrifice and think towards my future? You're constantly going to be playing that game. And at certain periods of time, like I'm just speaking anecdotally, there's certain periods of time where I'm all for the long term. And then there's certain periods of time where I'm like, I'm doing what I can for the long term, but like I have needs now. Like eventually I want to buy a new guitar, a new electric guitar. I want to buy a new head for my amp. Like, there's all sorts of stuff I want. All these things would drastically improve my life now. They're all things that I want. They're not needs, they're things that I want. So anyways, like you'll have to do some soul searching and figure out what's important for you, but there should always be some investing. You're not always going to be gung-ho, and maybe you're not gung-ho about it at all like I am. But there should always be some investing. You should always be doing something. And again, a good rule of thumb, max out your IRA, your Roth IRA every year. And if you have a spouse, have them do the same. Because you guys are going to be sharing the money, like, knock on wood, you don't get divorced. You're going to be sharing that money. So essentially, that's why I take care of my wife's finances also, because I'm like, it's our money. And if it helps her, it helps me, right? What's good for the goose is good for the gander. So anyways, this video is at like 18 minutes, so I'm going to sign off. So the first thing we talked about was when I'm going to retire. It's looking like 55 right now. I think 45 years old is a little more plausible. That'd be 17 years until retirement. Is what it is. Hopefully sooner, but got to make some moves in the short and medium term to make that happen. Second thing we talked about was opening a Roth IRA and prioritizing that as your main investment vessel when it comes to the stock market. Everyone should be doing this. And the third thing we talked about is keeping a long-term perspective, but living for the now as well and finding that balance, because it really is a balance. So those were our 3 topics for today. I hope you enjoyed it. Again, please like, comment, subscribe. If you have suggestions for future videos, please put it in the comments. I will talk about it. Even if I talk about it and tell you I don't really know much about this, this is what I found out. I'll give you whatever insight I can. So thanks for watching the video. Wealthier by the day, day 12. I'm out of here.